Hello and welcome to LAT's Market Snapshot. Today we're going to focus in on the Relative Strength Index, the RSI. It's a key secondary indicator throughout the retail trading world as an indication of market momentum. Now it's very commonly used and discussed, however the interpretation of it can be very different, and it's important to understand which signals you're going to take and from which time frames. I want to have an interesting look here at gold. We've got two time frames here, the 4 hour and the 30 minute. And I want to look at the different time frames and the signals you can take. One's going to prevent you getting into trouble, and one's going to get you into signals and into entries to hopefully have some profitable trades. Now on the 4 hour chart, the larger time frame, we can see this beautiful downtrend, some nice support and resistance zones along the way. Now as we look towards the RSI, what we're looking for is to see the similarity, the convergence between the price and the momentum indicator. So as I make lower lows here in this downtrend, we can see in the red arrows here, there are lower lows on the relative strength index. Now, although we come into this oversold region, dropping down below 30%, it's not an indication to stop selling. The probable outcome from this is that we drift sideways and then continue to move lower. However, when we do then get that third leg lower off of this trend line, we now find ourselves with bullish divergence. Now, taking from the higher time frame, your major trend, bullish divergence, that is an indication to stop selling. Okay, not necessarily to have to go long to go against the trend, but it could be an early warning indication that this downtrend is starting to run out of momentum and we may see some further upside pressure. So whilst seeing the similarity and a matching price to RSI can be confirmation to continue moving lower, once you get that bullish divergence, it doesn't say we have to buy, but it's certainly an indication we may want to pause, take a breather, allow this market to reset, test the trend line. The probability of that trend line breaking far greater when we're coming from a move that has that bullish divergence present. Now, whilst we were in conditions where this was matching, where we had lower lows on the price and we had lower lows on the RSI, that was our green light and our ticket to keep going short in gold. Now we can then change up our time frames, come down to our minor time frame, look towards the 30-minute chart and take bearish divergence signals to allow us to enter into short positions. And we saw ample opportunities when we came up to this first resistance level. We saw higher highs here on the price, lower highs here on the relative strength index. When we came up to test the trend line, we didn't see any divergence. Okay, we had a lower high on the price and a lower low on the RSI, so no signal coming for us there. A strong sell-off did follow off the trend line, however, no RSI to support with that position. As we came up for the third touch of that trend line, bearing in mind at this point we were oversold on the 4 hour, however, had no bullish divergence, so still in a negative territory, still giving us signals and opportunities to go short. We did then see this bearish divergence, higher highs as we come up and test the trend line, lower highs as we test on the RSI. As we continue lower again, all of these coming up to key resistance levels, by the way. Strong support down through here, retested, act as resistance. We come down to the level which ultimately went on to break this trend line. We did have a nice region of previous support, resistance, acting as resistance. We also had bearish divergence. We were overbought with a lower highs on our relative strength, equal highs on our price. However, the indication not to short this market was not from this 30-minute, but in fact from that 4 hour. Here, at this point, if I just circle where that short position was looking to set us up, that would have been through here. This test here of this trend line, this was in the position where we had bullish divergence on the 4 hour chart. So regardless of this being still in the downtrend and 30-minute bearish divergence, this was the signal not to take, and we get that confirmation from the higher time frame here, suggesting this downtrend was running out of momentum. So it's all about using a combination of time frames. You've got to have your primary support and resistance to help confirm your trades, but you've also got to have an understanding of the major trend and also the minor trend. So here looking at a consistent downtrend and using bearish divergence on the 30-minute to reverse the counter trend, along with taking signals of when not to trade. Okay, staying out of a bad trade sometimes is as important, if not more important, than getting into a good trade. Okay, reducing the amount of mistakes we make. And I thought this was just a lovely example where our major downtrend showed signs of bullish momentum, and that's where that takes the dominant force. We then ignore the 30-minute bearish divergence telling us to sell because we have a larger indication that this might be a long position. Excellent now to see this failing up here through this monthly pivot point and a move back down towards this trend line. Is this going to be a retest and a move higher? Only time will tell. The RSI for both of these at the moment sat in no man's land. The 30-minute chart reflecting the price, the RSI reflecting the price, and the 4-hour chart sat in and around that 50% region with no real dominance to be bullish or bearish. Thank you for joining us for this market snapshot. Please do join us next time.